I'm with you, and I think if anything, those valuations do get squeezed. But I think there'll be some degree of compensation from the economy continuing to grow, which is why I wouldn't be deeply bearish on the market, but I would be on anything that's growth.
So going back to Jeff's original point about the mea culpa, Latin, not Greek for some of you who didn't do classics. The fact of the matter is, they're wrong, and now they're getting almost bullish. Should I be getting bearish at this stage as these people who, and don't get me wrong, there's some really smart people who I totally admire out there, and I love listening to them and talking to them, but they've been unambiguously wrong since October. Should I now get bearish as they get bullish?
I think if I had to do yes or no on that, then yes is the answer. Markets move too far too fast. Retail is now coming in as well, never a good sign. And it may take a few weeks, but I think there will then be a bit of a pullback.
No, because I was talking to my taxi driver who'd been reading the Daily Mail. Sorry.
It's always a good read. Nothing wrong with that.
Give us a bit more detail on something else you said to Jeff about the ramifications of the JGB as well. Again, we have our own concerns about what's going on. He spoke to Kuroda a couple of weeks ago and didn't really get too far, actually, in trying to see whether there's going to be an evolution of the policy post-Kuroda in April, what have you. What are the ramifications? You talk about bond yields picking up everywhere. So what, you think the BOJ action will augur a sell-off in JGBs and elsewhere?
So look, one way or the other, the BOJ has to retreat from that 0.5% cap. Because it's unsustainable. You cannot go on and on and on. Inflation is finally rising. You quoted those wages numbers. So one way or the other, the BOJ lifts that cap at least somewhat. Now, that doesn't just affect the JGB market. It affects bond yields everywhere. Why? Because bond yields are linked around the world, because Japanese, both institutions and retail, are buying bonds elsewhere to make up for the fact they get nothing at home, etc., etc. So of course, if one of the world's biggest central banks, which is basically the only holdout, right? All other central banks have tightened. We don't think they've gone quite far enough, but they've tightened. Not the Bank of Japan, unless you count that little sort of wiggle they did 2 or 3 months ago, right? So now that's the last boot to fall, and in particular, they are aiming at the long end. All other the central banks they've done some at the long end, but the BOJ is the one that has really pushed at the long end in the way that no other central bank has, by having that outright cap. You take that away, you affect everybody.
Yeah, you extend the logic on that. We were discussing Kazuo Ueda, who now looks like he's going to be the next governor, and I was making the point that I'm not sure how excited the market will be about this. The early market reaction is to strengthen the yen, which to me suggests that they do believe that this is someone who wants to move away from the ultra-easy conditions. But if the Japanese start selling their foreign bond holdings because they can now make money in JGBs, that has a lot of implications for where yields are going in the Western world.
Completely agree with you.
Right.
Yeah.
How worried do we need to be about that?
I think we should be very worried. And this will be a bumpy process, right? Because the initial effect is a sell-off in JGBs where they're not attractive. But as the yields rise, then of course. So yeah, it means that the Treasury yield has to go way above 3.6. It's just lunatically low. So, I would be surprised if it doesn't get at least close to 5%, to be honest.